But no, I'm excited to see. I know you kind of had some trades that went profitable. Always appreciate your emails. You and I will connect. The trading competition is launched, and they sent another email there as well. But
that would be fun.
I'm going to put up your charts here. Okay. Of course, the show is all yours, but I know you're going to yell at me if I don't do this. So, welcome to Trading Options with Sandra.
Welcome back, traders. This is Sandra with Trading Made Simple. I'm here to show you short-term proven strategies. People think trading is a one-size-fits-all market. It's not. We live trade and train daily. Let's talk trading. Good morning, good morning. How's everybody doing today? Well, so let's go over our XOM trade first. And while I'm doing that, if you guys can put in some tickers, we'll cover the major indices as well as some of the Mag 7. So let's do that and see if we can find a trade. It's been really choppy today, but we're, actually got a bullish bounce today. But let's go over last week's trade. So let's see. On Friday, this candle actually wasn't as big as it was when we got together, but it was around the 117 price, and we went for a debit spread. Now that debit spread within a couple days made over 100, and I think it was 45-50% before it took this bounce. So remember what I always do on put debit spreads as well as call debit spreads is it's easy management for me. It's 50%, take some of your profits off the table and let a couple of them run. And so that's exactly what I did. I just took a couple. I think on this trade, I had 5 contracts, just took a couple off when we hit 50% profit, and then let it run until I think it was about 130, 140%. And then removed it and then didn't take a look at it. And you can see that we bounced. And so if we take a look at XOM's, chart on a longer range, you can see, we've been flirting and consolidating around this upper edge. And we have this channel here that it's minding very well. But now that we've done a bounce, we're going to come up here basically and do a double top. And I always say that we're either going to do a double top or we're going to break the top and then go to a previous high. And of course, if we just look left on our chart, you could see that that is about the area of the double top, because we have a top here at the same level, top here at the same level. And really then we'll have to go up here to the 123. So we just took basically a couple day bounce, took it on a Friday. As soon as we got off the air, boom, it went down. And then the next 2 days was nice follow through, took our profits off. And so you can actually just create this type of weekly income flow as you identify just a couple tickers. You don't have to have 10 tickers on. You could just do a couple and, make a car payment or two, or rent, or a mortgage payment, depending on your proficiency and how much you practice. So let's go ahead and take a look right now over at a couple of the indices here. You can see on a daily time frame of SPX, right? SPX is pretty important to the market structure. You could see that we, on a daily time frame, we got on this rising wedge rising channel. And usually where we have support and resistance, whether it be on a smaller time frame or a larger time frame, always going to have fake outs. So we hit it actually 4 days in a row, finally broke through it and immediately came right back down underneath the 20. And now you can see that we're kind of flirting. Now we have fake outs and we kind of magnate towards those major support and resistance levels, And so here we're doing the same thing on the lower end. We took a little bounce today, and you can see where our 20 is. So I do like to use the 20. A lot of people like to use VWAP. You can use, your favorite EMAs or SMAs that you like to use. For me, it's the 20. It's very clear to me that we're, bearish below the 20, and we'll have a trend change and we're bullish above the 20. And so I just make it simple as that, and it works out very cleanly for me based on the way that I look at the charts. And so here you can see what next week's move is on SPX. So if we can actually stay, and look at how it just perfectly aligns with that existing channel that's already there. And I call this the trend pivot indicator on thinkorswim. I'll put it in the chat box. I'll put the URL chat box in the chat box at the end of the segment if you want to use this. It's one of my favorite indicators because it draws those trend pivot lines on all time frames. And so on a 15-minute, you can see that we actually have this gap. Now, we're in a very interesting spot because everyone is waiting to see, you know, are we going to break the 5450 level? That's really kind of where point of control is for SPX right now. And you can see that if we break below this 5431 level, we have this huge gap of 30 points underneath that we're going to fill completely or partially fill. Now, the fact that we have this gap and we have not attempted to fill it, if we can actually break out of this consolidation level, let's call it 5463, we can actually go up to 5480. And you can see where we actually, this red line right here, we dropped off from the weekly expected move. Now, 68% of the time, we actually close within that expected move. If we don't, it really looks bearish for the next following week. It's a very easy way to kind of keep track of the major indices. So as we look at SPX, let's look at the QQQs because right now the Qs are just following suit, but let's look at a daily chart on the Qs. You can see that momentum is really low. We actually took a bounce here prior to hitting its channel, but you could see how far away we broke above it. And so now we're back into basically its rising channel range, but we're very far from the 20. We have to get closer to the 20, and we'll either do this by either time or price. And what that means is either time is going to pass and we're going to go sideways for a couple of days, as long as it takes for the EMA to kind of come down and meet price, or price is going to bounce and we're going to come meet the mean. Because whatever you have on your chart, whether it be, you know, VWAP or an EMA that you're using to identify the mean, that's kind of point of control on your chart. And you can watch the ebb and flow on any time frame and see the exact same thing actually working itself out. And so it's not a lot of time or price where EMA is going to be extremely far away from price. They have to meet because it's the reversion to the mean trade, so to speak, if you've ever heard that. And so with that, I just use the 20 as the reversion to the mean and say, oh, you know what, we're really far away from the mean. Price has to either come meet it or we're going to go sideways. And as time passes, the mean, in this case, my EMA, is going to come down farther and farther until it gets closer to it. And then the cycle of energy starts back up again. Now, when we talk about the cycle of energy, we're talking about momentum. And momentum really drives price. And you can see where momentum, if we look here when we broke our zero line, and we look here up at the chart for the QQQs, you can see when momentum broke that zero line, how we kind of flushed to the downside. And you can see where, you know, okay, we did a little bounce here. What did we do here? We did a little bounce. It's not the opposite way around, even though this indicator is down below. It's because the momentum actually drives price. And you can actually see divergences with that as well. So here you could see that we drove right back down and we're coming back over to the 100 line here. So we may end up, and you can see next week for the Qs, we have a weekly expected high of around 472, a weekly expected low around 451, 52. And that will make it right on top of that rising wedge line. It's you would think it's a coincidence, but it's not. It's called really just confirmation. All of these indicators, they're different, but when they work together like this, as you're analyzing the chart, it really helps you to identify confluence in your analysis. Because isn't that what we're doing? We're looking at indicators, we're looking at time and price, and we're looking to see, you know, what's its next move to forecast. So as we look at a smaller chart now, you could see that today we gapped up, we hit that 20, And is it going to act as resistance or support? Right now, it's acting as resistance. We keep toying with it because there's always fake outs where support and resistance are until price finally figures out, does it want to go higher? So we really need price to go higher on a 15-minute so that we could be above this EMA. And when we rise above it is actually when we're going to see a trend change, because the trend so far has been lower, hasn't it? If we look at a day chart, the trend has been lower. And so as you start looking at a smaller time frame, you can see that we're still underneath that 20. And on a 15 is pretty major. You know, we do intraday trading on, 1, 5, 15-minute. And so you could see the 1 minute popped above the 20. So now we need actually, that was a 5-minute. And now we actually need on a 15 for price to pop above and stay above. And you could see where this is a Darvis indicator. TOS gives a free one out. You could check that out. It's called Darvis. And this just shows you on any time frame where consolidation is. Now, if you're a person that just hates to trade in consolidation and you're a scalper, this is a great tool for you because it's going to show you where there's consolidation and you could just stay out of it. You could stay out of it until it actually breaks above it or breaks below it. Oftentimes, when we have a gap like this, I really enjoy playing the gaps. And so you're really looking for a break above today's low, a break below today's low, to get a further continuation of that gap fill. We only did a little bit of it, didn't we? But really didn't mess around with the Qs. And you can see the Qs are gaining momentum right now. We just passed the zero line on a 15-minute chart. Could this be a trend change if we stay above that EMA? We'll have to watch it. Right now, I was looking at Gamma. Let's take a look at, by the way, that's SPY and QQQ, but let's take a look at Dow Jones really quick. Dow Jones, you can see that as far as sector rotation is concerned, right? We talked about this as it was happening a couple weeks back, and you could really see how the sectors were changing. You had the DIA and IWM that were always kind of weak comparably to SPX and QQQs. And then all of a sudden it flipped, right? And then there was a moment in time, I think it was when CrowdStrike, when they had their incident with their software not meshing with Microsoft, all of a sudden, you could kind of see, oh boy, is CrowdStrike too big to fail kind of a thing where we have one IT company really controlling, 50% of Fortune 500 companies, intricate software, including airlines and banks. That's a little frightening to think about. And then you saw all of the sectors go down. And that's what we talked about last Friday. Every single sector was going down. And so that can kind of help you again forecast your trades, or at least give you confluence in what you're identifying on the charts. So here now we can see the same thing where we have SPX and QQQs. We did gap up, but going sideways throughout the day. And then what do we have with the DIA? DIA not only gaps up, but this is called a gap and go. We broke above, well, actually, here's the gap from yesterday, right? So not only did we have a gap up today, but we broke above yesterday's gap. And what are we doing? We're going. We call this a gap and go. Totally bullish momentum going on here for DIA, and it's sticking around. Look at how it's going sideways. It doesn't want to break zero anytime soon here. If we look at a 5-minute, still bullish. We're looking at, and what do I have to do when I say that? All I got to do is look at my 20. Prices above 20, it's an easy look-see. Prices above the 15, prices above an hourly, and then let's take a look at the daily. Prices above the daily on the DIA. If you're looking for specific stocks and you just like to go long because maybe you can only buy stocks, you're not into options, look at the basket of stocks that are in the DIA. You can Google that, it's pretty simple. All right, and then IWM. Let's take a look at IWM. IWM is up a couple bucks. And you can see that on here on a daily, we're above the 20 easy. Let's go backwards here. If we take a look at an hourly, once again, we're above that 20 and 15, staying above it. We did flirt a little bit with the opening gap here. So DIA really just outperforming everybody right now. So if you're looking to buy some basket of stocks, or you're looking to, you just like to go long calls as an example, look for the momentum in that basket. That's where you're going to get your biggest bang for the buck right now, as these ones are not as progressive. And then where's our 5 minute? Okay, we were on a 5 minute. And of course, we're vacillating on top of the 20, which again is a fake out zone because it acts as support and resistance. Right now, it looks like it wants to go sideways. So let's take a look at some of the heavy hitters that we typically take a look at. NVIDIA, we gapped up and immediately came down. We filled the gap. And what do? We call this kind of a gap and crap. We fill the gap, and then we turn around and go back to the direction that we were typically in. We opened up in the higher direction, so we're heading back above there. If on a shorter time period, on the 5, we can stay above that 20. And then we look at a 15, and 15 is still bearish, right? We still got bearish momentum here. We need to pop above that 0 line. And you could see that trend pivot line, boom, 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 coming down as resistance as well. So I find that to be interesting as well. And then we also have this consolidation little area. So really a clean break of 115. Let's take a look. I was taking a look at Meta. Meta looks nice on a 15, turning bullish here and breaking within. Remember, this red line is that weekly expected move. We're breaking. Here's point of control. Here's the line. When you break above into that line, you're back into its range. So look at Meta, $12 today. Talk about some strength, right? So this looks really nice to get back into the range. It's going to close within its weekly expected move, and really bullish as well. We gapped up. We never made a gap fill, and we're continuing to go higher on a 5. Let's take a look at a 15. 15, it's above the 20 as well. And a 1 hourly still needs to break above the 20 for us to get that trend change. The hourly is probably the best. I like to look at the 15 and the 1 hourly as like a short trade. And so those are my favorite time frames. Let's see if you guys have any charts you would like me to take a look at. Oh, you want to look at a 3 minute. Okay, so you're just doing maybe some scalping on a 3 minute on the Qs. Let's take a look at that. All right. So I like to look. You could see that we have an up squeeze. This is the John Carter's squeeze indicator that you probably can get yourself on thinkorswim. It's an oscillator typically, and so this is really nice where we just turned it into a label basically and added it to one of our custom indicators, and you could see that it is showing you right now that we have had consolidation. Is that a surprise? No, because you can see our consolidation bands, which is called Darvis. Consolidation, and now we're breaking to the upside. Why? Because momentum is above the 0 line. So we're getting an up squeeze. So this is really nice right here, guys. We're also, you see the trend pivot line on the 5 minute. We're breaking above that flagging formation. And now where's going to be resistance? If you're in the queues on some calls right now, you want to get out at 464, just make it 30. And why? Because we're going to do a double top here. We're going to do a double top, and either we do a double top and revert back down, or we're going to break the top and break out to its next level, which is right over here at 467. I don't typically use a 3 minute, but let me go over here and change this really quick to a 3 minute and take a look. All right, so not much different. You can see the flagging formation here, actually this triangle, and we broke above it. We're breaking above the 20. And right now we're actually hitting the last 3 minute pivot high, which is this 463.35 level. If we could break above there and stay above that level, we're going to go to consolidation, which is at 464.30. So not bad. You got about another buck going on here if this can continue the bullish momentum. As we look at the wave indicator by Trading Made Simple, you can see that we're coming up to the 200 level. Oftentimes when we come up to the 200 level here, it really is identifying that we are overbought. And same for the down period here when you're taking a look at it. So as we're approaching it, you can see it's kind of curving. Now remember that we always do this at support and resistance levels. That's why it's always really good to take your profits when you are at resistance. When you see resistance coming up, take your profit because you get more money out of your contract as you're rising versus as a pause right here. And that's exactly what price is doing right here on a 3-minute, guys. If we were scalping this, I would have told you to take your money as you're approaching that 463.30 level. And even though it hit 37, I say get out at 30 because your premium is beefed up right before you hit it. And then as you could see, we're taking a pause, and we may flirt with this for a little bit, but you can see our indicator on the bullseye is indicating a call at 463.33. And right now, so you could actually program that in. This is why I love this indicator, because if you are an automator, you don't have to sit here and wait for it. You could just automate your trade, get into a long call as an example, or shares at 463.33. You can see we're not there yet. It's giving you a heads up of that's when you're going to get the momentum to continue. But as I see this little area right here, that 464.30 is still resistance. So that would be one area I would want to start taking some profits. Now here we give you some take profit target levels. By the way, you could try out this indicator on TradingView for free, 7-day free trial if you want to go take a look at it. Let's see here. That would be WHOP.com, WHOP.com / trading made simple / and you could check out the indicators for free for 7 days if you want to take a look at them. But in any event, you can use them on all time frames. So let's get to, I hope that helped, by the way, on your 3-minute. We're just hitting resistance right here. This may go sideways for a little bit, or it may come down and touch the 20 just to retest it. And then if the energy is still positive, it will then start to break out and get to the next level. Ebbs and flows, doesn't go in a straight line. Wish it did. All right, let's take a look at our watch list and see what do we have that might look good for the next following week. Well, let's take a look at some of these that have a hourly push. So we got HSBC. So we have banks really kind of looking positive. Interest rates rising a little. That's always positive for the banks. Like a weird no man's land right here. Like nothing really looks great. Let's take a look at, no. What I like to see is stocks that are already bullish that also broke above their pre-market high. This really talks about just continuation of positive energy. This actually looks good, but again, it's close to a double top as well. All right, guys, I'm going to go for a CVX, and this is another gas name. So we shorted this last week, but this week I think what we're going to do is we're actually going to take it long. So let's go. We only have a couple minutes. Let's go over to our trade tab and take next Friday. Do I already have this? Maybe I already have this, guys. Looks like I have a call on this. Maybe this is a vertical. Let's see what I got here. I might be just in a long call. I'm going to take a vertical on this. Let me see if there's another one. Shoot, I'll go ahead and take this one anyway. We could go ahead and get into another vertical. Might be good as price and the EMAs are starting to meet each other. If we took this, we would take this as a 160, a 162.5 call. So we're really looking for this. We're going to risk $86 to make two. So we're risking $86 to make 164. That's not bad risk versus reward. It also gives us time for it to work out. I really like this trade right here. And for this, we're going to go ahead and take some of these as well. I'm going to try to get in for it as 89. And then we'll go from there. And really, I'm starting to, I like this. The chart already is in a long position. We took gas XOM as a short last week only because it was just doing a reversion to the mean. It did the reversion to the mean, and now it's actually showing on a lot of important time levels like the 15 and the 1 hour, especially for a short trade. And then on a daily, you could see that it came down and just touched the 20, the reversion to the mean again. And I think it has enough oomph to possibly get to the 164 area on a day chart. If it could stay above the 20 going into next week, we could see a nice little run up to earnings here. So I actually like this. I think this might be good for a little profit. Remember, 50% profit, 50% loss is an easy management. Take a little bit off of your trade at the 50% level if the time periods still look good. Remember, we make our decisions on the day, 1 hour and 15. And so really what you want to do is just say, uh-oh, it's looking bearish all of a sudden on a 15. That's when I want to really start to take a look at it and see, should I just exit and keep my profits? Remember, you can always, once you hit the 50% level, just raise your stop loss to the break even. And now you're not out anything for your existing trade, and you still have room for a home run. All right, guys, we're running out of time. Sorry, I didn't get to interact and take more charts, but hopefully that's okay.
Yeah, well, we appreciate the insights. We appreciate the trades. And of course, you can go ahead and check out more of Sandra's content, trade ideas at tradingmadesimple.org. Sandra, thank you so much. We will see you next Friday.
See you next Friday, guys. Have a great weekend.
Take care. All right. Chat, you know we love to go ahead and bring